Hey, it's R.C. Thornton here, a tax professional, and I wanted to answer for you today one of the biggest questions that I get from my business owner clients who owe a bunch of money in back taxes to the IRS. They all say to me, RC, dude, I love being in business, I love being an entrepreneur, but being self-employed, man, it's making my taxes go through the absolute roof, and it's a huge part of the reason I even have this problem in the first place. And you know, I heard about this thing out there called the S-corporation. I heard that you go in there, you move your business over to one of these bad boys here, get it all set up, and your tax bill is just gonna sink and go down in future years. How does that work? Should I do it? Is this a good idea for someone with back taxes? Great question. The biggest thing you have to understand about having your business set up as an S-corporation, it is the biggest double-edged sword in the entire spectrum of the IRS and taxes. Now, what do I mean by that? The rumors you've heard are absolutely true. If you set it up right, if you do what you're supposed to do, dot all your I's, cross all your T's, you will save a tremendous amount of money in taxes in your business. And I really think in the right situation, it is a great idea because when you set up your business that way, you not only can save money in the year you set it up, but also in future years as well. But why do I say it's a double-edged sword? I say it's a double-edged sword because if you don't do it right, if you set up an S-corporation and you don't follow all the rules and you mess it up, it will absolutely dig you deeper and deeper into problems with the IRS. So here's exactly what I mean about that. So think about like maybe where you are right now. Maybe you're self-employed, you're Schedule C. So if you think about it logically, how can you do your taxes for Schedule C if you really wanted to? If your idea of doing taxes was something like March rolls around, it's a month before the filing deadline, you wake up one morning and you're like, oh crap, I have to get all my stuff to my accountant to get my taxes done. If you're self-employed, what can you do? You go download all of your bank statements, you go through them, you highlight everything out, you take that nifty tax organizer that your accountant gave you, write in all the stuff, write in your expenses. Okay, I had 4,000 miles I drove, here's my home office. And you go give it to your accountant and your accountant just does something in his computer, prints it out and says, here you go. Here's your taxes, this is how much you owe. Can you get away with doing it that way if you want to? You can. I wouldn't recommend it, but you can do that, and a lot of people do. In other words, if you're self-employed and on a regular Schedule C, the threshold, the minimum viable threshold to be able to do the right thing as far as compliance is fairly low, right? But what's the problem? Let's say you're going to get all fancy on me here. You're like, I don't care about low threshold. I care about saving money. I want to set up my S-corp. Okay, well, let me share with you some of the things you have to do if you set up an S-corporation. One of them is you have to maintain a balance sheet. You have to maintain all of your assets, all of your liabilities, all of your equity, track all the changes and all those different things, and you have to have it down to the dollar accurate in your business. Now, why does that matter? Because the IRS asks for it. If you're making money in your corporation over $250,000 gross, you got to give them your balance sheet, and you have to keep all that. Schedule C self-employed, they don't care. That doesn't matter to them in the slightest. Second thing they're going to want to know about is your contributions and your distributions from your business in the year. You're self-employed, the IRS doesn't care how much money you put in, or they don't care how much you take out. All they care about is how much was your profit by the end of the year. But if you have a corporation, you have to track the money you put in. So if you put money in, you have to track that down to the penny. If you take money out, you have to track that down to the penny. What happens if you don't track that information and you take too much money out of your corporation? Boom, you get taxed. More taxes, right? That's exactly what we all want out of this. But you have to keep this all locked in and pay attention so that you don't run into problems with that. Now, here's the biggest one that people get tripped up on is salary. If you're self-employed, you can take money out, pay yourself whatever you want. But if you own a corporation, an S-corporation, you absolutely are required to put yourself on W-2 and give yourself a salary. Now, here's the the weird thing about S-corporations, I've seen a lot of crazy tax stuff in my day, but the craziest that I see is people that set up these corporations and pay themselves no salary at all. Did you know that the IRS's biggest audit area that they love to hate is corporations that pay themselves and their officers too little or no salary at all? People do this all the time. This is one of the biggest audit areas that the IRS has. And if you do this, if you have this corporation set up, you're not doing any of the things I mentioned, and especially you're not paying yourself a salary, you are just heading for a world of trouble. Basically, what I'm trying to tell you guys is this. This can actually be a really good choice for you. And all my clients that kind of fit the profile, I absolutely recommend. But here's the problem if you get it wrong. And here's another important thing you have to remember, right? If you have tax problems right now, if you're a business owner with back taxes to the IRS, it's because you're not meeting a minimum viable threshold of tax compliance, right? You're not tracking stuff in your business. You're not making sure you're complying, right? So if you're just a normal self-employed person and you have a tax problem, okay. So we have our income tax problem here. What happens if you set up a corporation? Not only do you have a personal income tax problem, you have a corporate income tax problem too. You might owe thousands or tens of thousands or over that in corporate penalties for late filing, late paying, all this kind of stuff. So you have two sets of tax problems you have now. And if you don't do the salary stuff right, like I told you about, you now, congratulations, have a payroll tax problem. So instead of having one tax problem, you have three tax problems. Three tax problems because you tried to get tricky and save some money. One other thing I would tell you, payroll tax problems of all of the civil enforcement areas that the IRS has, payroll taxes are the #1 civil enforcement areas. Whenever I get someone who comes to my front door with back payroll tax problems, I instantly know the IRS is enforcing on them at the highest possible level. So if you do not do it right, you have three tax problems, including the worst civil tax problem you could possibly have, which is payroll taxes. So do not let your desire to save some pennies in taxes make you drown more in dollars of tax problems down the road. So, hearkening back to the question that I originally posted and wanted to talk with you about in this video, should you set up an S corporation if you have back taxes? And the answer is absolutely if you do it right. So what do you need to do if you have back tax problems? How do you know when you're ready to graduate to having an S corporation? There's really two things that I recommend. #1 is you have to get your baseline set. You need good bookkeeping. You need to be on top of your tax compliance from now on. You need to set up your payroll and your salary properly. We help all of our clients to do that when they're ready to graduate, but more importantly than just the technicalities of what you're supposed to do, it's more about a mindset shift and an approach in your own mechanism of thinking that now this is a high priority for you and you are absolutely going to get it right from now on. The other thing too, I always tell people is you need to have kind of a minimum going concern in your business. It's really only worth it, in my opinion, to even start to do this stuff. Your net profit in your business, I'd recommend at least $80,000 to $90,000, because if you're making less than that, the compliance costs, bookkeeper costs, accountant, tax prep costs of all this stuff is going to not really make it worth it for you. And the marginal benefit, right, if your income is low, is going to be small anyway, and it's going to be a lot easier to get tripped up. So absolutely do it. One of the biggest secrets I tell people about fixing their tax problems is to come up with ways to owe less in the future, because if you owe less, you pay less, and it's much less likely that you will continue to have a tax problem, but you have to do it in a smart way, and you have to get your baseline taken care of before you try to get too fancy. I see a lot of people, like I mentioned earlier, who tried to get fancy and they really hurt themselves with an S corporation, and it's not worth it. And when I have to sit down with these guys and tell them, like, here's the problem you caused because of this, they all say, like, wow, I wish I knew how to do this right. the first time around. So anyway, you know, guys, if you watch this video, if you're thinking to yourself like, yeah, I need to kind of get this problem taken care of. I've made my decision that I don't want to keep living under a rock, running from the IRS. I have bigger goals in my life. I have things I want to do, man. I want to make more money. I want to become more successful. I want to up my level of play. I want to reduce stress, but I got to get our good buddies, the IRS, taken care of first. Here's what I'd recommend you do. Above, below, somewhere around here, there's going to be a link you can click on to schedule a 15-minute tax analysis session with me. We'll sit down over the phone. I'll kind of listen to what you have to say and where you are and give you some recommendations I think might be able to help you get this taken care of. It's not a sales pitch, guys. I'm not here to like strong arm you into doing something. All that stuff's a waste of time for both of us. But if I can help, I will share with you how I think I might be able to give assistance. If not, I'll try the best I can to refer you to someone or something else. But it really takes that first step to get this thing taken care of and out of your life, right? You want to move on, you got to take that first step. Anyway, thank you so much for watching, and I look forward to talking to you soon.